Good morning, and welcome to Market Monday for February 17th, 2025. To revisit what Ben said last week about the potential February chill arriving in earnest, well, right about now, it appears individual investors got the memo, as we now have the most bears in the AAII, the American Association of Individual Investors, the most bears since November 2023. If you recall, that marked the end of the 10% correction. Bears being up 13% in 2 weeks, see that right there, is also very rare. We saw that at the end of the 10% correction in the fall of 23, March 23, the regional banking crisis when a couple banks failed, and late September of 22, just a few weeks away from the bottom of the bear market. What they're probably worried about is this. Here's that bear market I just referenced right here. Just a 27% drawdown in the S&P 500 stock market, right in line with the average non-recessionary bear market. Recessionary bear markets are typically worse, experiencing about 50% larger drawdown on average. And here's the challenge. We have been lucky over the past 15 years. Only one recession, lasting 1 month, which one could argue was due to an artificial black swan global pandemic. And aside from that, nothing but economic growth. Has our economy structurally changed so that business cycles and recessions no longer exist? Has the Fed become the omnipotent force in markets? If so, will it always be? That's a single point of failure we're not comfortable putting all our chips on. After all, prior to the last 15 years, we had 2 very nasty recessions in 1 decade. And before that, a recession at least once per decade, which is sort of the point. Once per decade. Painful? Sure. Scary? Uncertain? Of course. A reality as investors in the stock market? Most definitely. It's one of the prices we pay for returns above cash over long periods of time. And speaking of, what are those returns? Turns out, it depends on your definition of long term. 1928 to 2024, 9.9%. 1950 to 2024, 11.5%. 2000 to 2024, 7.6%. 2009 to 2024, 14.5%. Yes, including any and all of those bear markets, recessions, non-recessions, red presidents, blue presidents, tariffs, wars, you name it. And while so many are focused on researching the economy and inflation and rates and valuations, many of the topics we cover here every week here on Market Monday, teasing apart the tea leaves, so to speak, we believe one of the, if not the, most important issue over the past 50 years of investing is this: the proliferation of company retirement plans. Every 2 weeks, more and more people just keep buying, no matter what. Have a great week.